Hi everyone. Today we're going to do lesson 7.2 on preparing a balance sheet. Our objectives for today are to prepare a statement of owner's equity, which we will then use to prepare a balance sheet for a service business organized as a proprietorship. Now, we're going to start off with the statement of owner's equity. This is a report that is going to show the changes in the capital account for a proprietorship over a period of time. We're going to take the account titles directly from the worksheet. We're going to use the account title columns, and we're also going to use the balance sheet columns. So in order to do the statement of owner's equity, we're going to put the name of the company. We're going to write the name of the report, which is the statement of owner's equity. And because this is a range, we're going to do for the month ended and then the last day of the month. Our next step then is to enter in the capital. And again, that's coming right from the balance sheet columns on the worksheet. After that, we're going to take our net income, again from the worksheet. We're going to subtract the drawing from the worksheet. And then that is going to give us a total of 2012. We're then going to add these two together to give us our current capital. Current capital is very important because that is an amount that we are going to need for the balance sheet. So if you were going to do this in your head without doing the statement of owner's equity, you would the formula would be capital plus net income minus drawing. So current capital is capital plus net income minus drawing. And that's essentially what we're doing here in this statement of owner's equity. And that is depicted here. However, the difference in what I just explained to you in calculating current capital is that if there is a net loss, instead of adding net income, you are subtracting net loss. So I like to think of it as capital minus net loss, we're subtracting because net loss is a negative. Drawing, we subtract because it's a negative, and that gives us our current capital. But remember, net income, that is a positive. So if there is a net income, it's capital plus net income minus drawing. So these calculations are very important if you're doing the balance sheet without the statement of owner's equity. Now, the balance sheet is going to report financial information on a specific date and is going to indicate the financial condition of the business. There are 4 sections of the balance sheet: the heading, assets, liabilities, and owner's equity. The information needed to prepare the balance sheet is obtained from the worksheet. We're looking at the account title columns, everything from cash down to income summary. So income summary would be our dividing line right here, so cash to drawing. And then the amounts in columns 7 and 8 of the worksheet in those balance sheet columns. To do the heading of the balance sheet, we're putting the name of the company, then we're putting the name of the report, which is balance sheet, and we're putting the date. It's just the date. We don't have to put for the month ended because the balance sheet could do at any period of any day. It's not over a period of time. So for that reason, it's just the date, and that's one of the bigger differences between the income statement and the balance sheet. Now, to finish the rest of the balance sheet, you're going to list all of your assets on the left-hand side along with the asset amounts. On the right-hand side, you are going to list the title liabilities, any liabilities you have, and the total liabilities. That's the easy part. Then what we're going to do is we are going to indicate the capital. Now the capital, and I repeat, the capital cannot be taken right from the worksheet. You need to figure out what the current capital is. This is the biggest mistake that people make on the balance sheet. And so in order to calculate current capital, you need to do those formulas that I just explained to you. So if you do the statement of owner's equity, the current capital is determined there. But if you're not doing that prior, you need to do the formula. So if there's a net income, you do capital plus net income minus drawing. If there's a net loss, you do capital minus net loss minus drawing. That will give you the amount of current capital. I repeat, this number here, you do not take directly from the worksheet. You do capital plus net income minus drawing. Or if there's a net loss, capital minus net loss minus drawing. And that will give you current capital. Then you add your two liabilities and it will give you your total liabilities and owner's equity. If you did everything properly, once you're finished, the total assets will equal the total liabilities and owner's equity. One thing that I do want to stress here, it's very important for you to add up both columns and make sure that they match. Don't just copy this amount over here and move it over here because you know they're supposed to match. Everyone messes up on the capital and forgets to do the calculation for the current capital, but that is one way to catch if you are forgetting to do that step, is if you actually go in and add this total with the capital.